Investor sentiment has had a little bit of bullish damage done based upon the fact that early this week they gapped down back through the T-line. Gapping down shows a lot of force. There's other times where the market has traded back below the T-line, but it gradually moved there, whereas this shows a lot more intensity as far as the bears taking control. However, you can see over the past couple of days, they have not been able to push the market down any further. But the overall scenario is, as we can see in the NASDAQ, when they did a bearish Harami gap down, they were hovering right here at the T-line, but today, after trading up most of the day, you can see the bears are starting to take control. Doesn't necessarily mean it's going to be a dramatic pullback, but you can imply that there's probably still some more profit taking or selling occurring during this current trend. This makes for some high probability trades on the short side as well as on the long side when the market's kind of moving sideways. Our recommendation on CRTO was based upon this big dumpling top. The dumpling top is opposite your fry pan bottom, where the expected price movement is a strong move to the downside. We can also recognize which positions are ready for a high probability short trade in the sense that on our recommendation of CRSP, we have a left-right combo. That's a doji, which shows a day of indecision, followed by a bearish engulfing signal, which shows a lot more resiliency as far as the bears taking control. Today we had a doji sitting right here on the T-line. Stochastics heading down. Probabilities say if this opens lower tomorrow, they're taking it down, and probably with the same magnitude as what this candle was right here, or your bearish doji sandwich. Knowing what each signal and pattern represent allows the investor not to have to sit and wait to see if it's going to confirm a big down day, but they can get in early and take advantage of that big move to the downside. Again, the opposite of a dumpling top is a fry pan bottom, which is a big rounding bottom. And what do we look for at the start of that pattern? A breakout. Notice our best friend signal, the doji gap up. Now we've got a double doji setup, which tells us that if this opens positive tomorrow, you want to be buying immediately. Number one, because the implication is coming out of a fry pan bottom, we should have a strong price move. Secondly, after that strong price move of your best friend, now we have what we call a double doji setup, which tells us if they open positive tomorrow, they're going to have another strong day about the same magnitude as this day. This allows an investor to be placing funds in the right positions at the appropriate time. You don't have to wait to see if a pattern is moving. You know when it should be working, which is based upon a breakout type situation. That'll be it. We'll see you in the chat rooms.